Ladies and gentlemen, Greg Michalowski from ForexLive.com. The Forex trading week is getting off to a slow start. Most of the major currency pairs but the US dollar are within 0.07% of the closing level on Friday. The two exceptions are the euro versus US dollar, which is down around minus 0.11%. But the biggest mover is the dollar Swiss, which is up 0.18%. So I thought I'd take a look at that chart because it's trading between some key moving average levels that will help define the bias in the new trading week for this currency pair. So let's take a look. I want to first have you paid attention to the green line. That green line represents the 200-hour moving average. And as you can see in trading on Friday, the sharp move to the downside came right down to that 200-hour moving average. We dipped a little bit below it by a few pips and then rotated back to the upside. And early trading here today, the first hour trading, perhaps as a result of wider bid-offer spreads, moved down to that 200-hour moving average and did find support buyers again against that level. And as the market more normalizes here, we've seen a move back to the upside here with the pair currently trading at the highest level of the day at 0.87425. On the top side, we have this blue line. This blue line represents the 100-hour moving average, which comes in at 0.8750. If we were to move above that level, that would increase the bullish bias for this currency pair and open the door for a move back toward the 50% midpoint of the move down. This move down comes from, let me have to go back in time here to this high going all the way back to June 30th to the low price that we saw here on July 27th. The 50% retracement was tested on Friday before the sharp move to the downside, and so that level would be a key target if the price is able to get above the 100-hour moving average. Admittedly, last week we did move above that 50% retracement here and here, but each of the time the market couldn't sustain the momentum. We rotated back to the downside and then saw the 50% hold the level on Thursday after those two failures on Tuesday and Wednesday. So in trading this week, if the buyers are going to take more control, we need to get above the 100-hour moving average. That's step one. The next step is to get above the 50% and stay above that level. If we can't do that, guess what? The sellers are still in play, and we look for a rotation back to the downside. If we do get above the 50% and stay above that level, we look to extend toward the high price that we saw on last week, also toward this 0.88096 level. Now we look up toward the 61.8% retracement up at 0.88387 as the next target. Conversely, if the price were to move back lower, and we might watch the 38.2% retracement for early clues today, if we go below that level and then get below the 200-hour moving average and stay below that level, it opens up the door for further selling potential with these lows down near the 0.8658 or 9 level as a next key target to get to and through. If we get below that level, we'll look toward the 0.85307 level. So for now, however, the pair remains in between the 100-hour moving average, the blue line above, and the 200-hour moving average, the green line below. Markets looking for the next shove outside of those key technical levels. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.